It's been an awful couple of months for the restaurant industry, aside from a handful of rare exceptions. Let's call it Chipotle's, Domino's, obviously delivery, Wingstop, some delivery and pickup. Unless you have an incredible delivery and takeout platform, lockdown's been absolutely devastating. Increasingly, though, we're seeing some middle ground here. Restaurant chains with deep pockets that are holding up okay, even as they've experienced some big declines. Take Yum! Brands, the parent of KFC, Pizza Hut, and Taco Bell. More than 50,000 locations across the world, including one place it doesn't have is China. That was spun off years ago as Yum China. This morning, the real Yum reported, and while the quarter wasn't perfect, it also wasn't the end of the world, which is why the stock only got dinged 81 cents today. The numbers were nearly in line with Wall Street's lowered expectations. Sales a little better, earnings a little light. For the whole quarter, KFC saw an 8% same-store sales decline. Pizza Hut was down 11%. Taco Bell was actually up 1%, as the owner of the temporarily closed bar, San Miguel, I'm jealous. Yum was in good shape until mid-March when the outbreak exploded. Even now, though, they're working with their franchisees to promote contactless deliveries and safe drive-through pickups that allow the chain to operate during a time when so many competitors are closed. Could be a lot worse. So what's the future look like? Let's check in with David Gibbs, the new CEO of Yum Brands. Learn more about the quarter and how his company's handling COVID-19. Mr. Gibbs, welcome to Mad Money.
Well, thank you for having me, Jim. Hopefully we'll be able to do this in person after our next earnings call. Wouldn't that be great?
Oh, that would be terrific. Just terrific. Well, David, look, the country's about to open up. People are going to be going out. What do you think it means for your great brands?
Well, look, first I'd like to start by thanking all of our employees around the world, particularly our frontline workers, the 1.5 million people that are in our restaurants. These people are dealing with an incredibly challenging environment and doing an amazing job bringing our business to life for the consumers today, serving them the safe, affordable, craveable, and convenient food in a low-contact manner that they want. And I'd also like to thank our franchisees. They're our great partners, 2,000 franchise entities around the world, of which Yum China is one of them, serving our customers and taking care of our business and partnering with us to adapt to the changes that are taking place in the marketplace. And as you said, the business is changing and the consumer's needs are changing, and we are there to meet it. We have a very heavy off-premise business. We were off to a great start in 2020, building on the momentum that we had in 2019. You mentioned Taco Bell was up 1 for the quarter. Right. They were actually up 6 before we had the impact of COVID-19. And all of our businesses are getting stronger all around the world. So we're now dealing with the challenges of COVID-19, and I'm incredibly inspired and proud of how we're getting through this, and the business is getting stronger, and I'm convinced we will come out of it as a stronger company.
Well, how do you feel about the reopening? I know it's going to be staged, but are you looking for a surge of demand?
Well, the reality for us is that we do have stores closed. We had at peak 11,000 stores. We talked about that today on the earnings call. We're now down to just 10,000 stores closed out of our 50-plus thousand. But the vast majority of those closures are outside the U.S. So when you're talking about reopenings in the United States, it's not really reopenings for us. Our stores are open in the United States because we skew so heavily off-premise. We have 95% of our KFCs and Taco Bells with drive-thrus, and obviously Pizza Hut is perfectly designed to meet consumers' needs in this environment. So for us, it would just be reopening the dining room in addition to having already operated the restaurants.
Right, so let's talk about reopening the dining room, because there are issues. I mean, for instance, the CDC put out a note about a restaurant in China, in Guangzhou, which had air conditioning that blew from one table to another table to another table. The airflow brought out a cough that led to many instances of COVID-19 at the restaurant. What are you doing to be sure that people will be safe in the restaurant?
Well, to start with, we're being incredibly cautious and going above and beyond when it comes to the safety of employees and customers. I think we talked about this the last time you and I spoke.
Right.
We always go above and beyond when it comes to food safety. If the procedure that a local health department has is they want you to put gloves on, we have you sterilize your hands before you put the glove on, even though it's not required. So we've been doing that in our restaurants for years, and in this environment, we've obviously pivoted to masks and gloves for all employees, and we're adding shields to our restaurants, taking the temperature of employees, all the things that customers would want to do and employees would want to ensure safety in the restaurant. But you raise a good point. There are a lot of unknowns about reopening restaurants. The CDC is issuing guidance. The National Restaurant Association has guidance. We're going to go above and beyond whatever guidance is out there, and that's why we're going to be cautious about opening our dining rooms.
All right, now, how about the chain of food? We're all throughout all the papers today talking about the food chain. Does it work? Could it break down? Particularly chicken and meat. What's going to happen for you guys?
Yeah, we're in good shape when it comes to our supply chain, but it's obviously something we talk about every day. We know we have 4 to 6 weeks of supply secure, and then beyond that, we've got a pretty good comfort that we'll have supply and we have contingency plans. I know that there's a lot of discussion about supply chain, but what's really happening is you're seeing the disruption of the supply chain into the restaurants and more demand into grocery, and that's causing shifts, and you're seeing some, with the lack of demand, closing of some plants won't necessarily show up as a lack of food for where people want it. But we're in good shape.
All right, so how about Pizza Hut? How do you get that to do better? What is going to take it so that you feel confident that this division should remain a division within the House of Yum?
Well, first of all, we're absolutely ecstatic that Pizza Hut is part of the House of Yum. It's a great brand. It's a global iconic brand. And in times like this, it's even more valuable in our portfolio. And we've been on a mission with Pizza Hut to migrate it from what started, 50, 60 years ago as a dine-in business to a true modern delivery, carry-out, technology-driven business. And we're making great progress. You can see that in some of the results I shared today. And with what consumers want from brands today, they want Pizza Hut's kind of offering. They want great indulgent food at great value price points in a safe, low-contact environment. We at Pizza Hut, as you know, introduced contactless delivery and contactless carry-out in China, and then we've taken their learnings and spread them throughout the world. Just to give you one great data point, our Pizza Hut Japan business is up over 50% for the month of April. So right now we're seeing that model really connect with consumers, this contactless model and everything that Pizza Hut stands for. One of the great strengths of Pizza Hut is this is a brand people trust. They grew up with it. It's been around for 60 years. And in times like this, people turn to the craveable, indulgent food from brands they can trust that they know are going to deliver to them in a safe manner. So we love Pizza Hut, and we're excited about what's going on with Pizza Hut in the U.S.
All right.
With Kevin Hochman, our new president.
All right. So last question. I am concerned you are a franchise operation. Franchisees are not all created equal in terms of their balance sheets. What are you doing to help some of the franchisees that are weaker, and are they going to the PPP?
Yeah, we've offered for franchisees that are in distress and that need support, we have offered them a grace period on their royalties. We've offered them some deferrals on some of their capital obligations for remodels and new unit stores. We recognize that liquidity is important right now and we want to support our franchisees. As far as the U.S. franchisees and accessing the PPP program, as you know, being a restaurant owner and a small business owner, you're and a great advocate for the restaurant industry, I might add. Our franchisees in the U.S. are exactly that. They're small business owners, and they were harmed when the coronavirus hit and impacted everybody's business. And what they're doing with their banks and applying for loans is obviously their business. But certainly the program was designed for people like them to keep employees employed in their stores, and that's what we're doing. As I mentioned earlier, we're staying open through this crisis.
But obviously, worldwide organization, so each country different. But you feel pretty confident that most of the countries are in pretty good shape.
We feel, as we said on the call today, the franchise health, you can't paint with a broad brush when you have 2,000 franchisees. Right. But, we went into the crisis certainly with a few people that were in distress, and, that hasn't changed. But, we're working with each of our franchisees. We're going to get through this, and, the spirit in the field is clearly we're learning every day. We're an organization built on brand builders, people that react to consumers' changes, and we're figuring out how to thrive in this environment, and I see our business getting stronger every day.
Excellent. That's great news. Thank you very much to David Gibbs. He's the CEO of Yum Brands, YUM. When the smoke clears, there won't be a lot of restaurants left, but this one will be one of them. Mad Money's back into the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.